Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, April 15th, 2019. Today, for the most part, was a flat day in the markets. We had QQQ up 0.02%, so virtually a flat close on QQQ, as well as SPY. The SPY was down 0.07%. And you had small caps down a little bit more at negative 0.32, through about 0.3% on the small cap. So large caps for the most part closed flat, and therefore not too much to report. Although there are some things that I figured warranted a video today that are worth pointing out. First and foremost, we did have a tag of that trend line. I've stated lately I've been watching this trend line off the lows on December 24th. We had several reactions up to this point. 4 or so reactions right there, and today we kissed it perfectly. So we broke down, we had some impulsive selling in the morning, followed by an equally impulsive reversal. I'll get to that in a second, but the important thing is, so we broke down on the 60-minute charts. I'm going to get to that in a second. That breakdown triggered a move down to hit this trend line, and this is more significant because this is a daily chart. So right now that's what we have, another tag that helps to validate that trend line because we had a reaction off it intraday here. And the bigger picture is this: the market's still within spitting distance from its all-time highs, and whether or not they tag those highs or right about this level, whether or not we reverse just shy, make a perfect kiss, or pop through, those are all, we're talking within percentage points there, within just a couple percentage points. So to me, that's moot. Which one happens doesn't really matter technically. The only thing that would surprise me, and I don't believe it will happen, is some type of blow off top where we break on through there and just keep running. Even if it's after a little back test. I put the odds very low because of everything I've talked about. Divergences for the first time since last October, before the meltdown started, negative divergences. The low volume is a warning sign, if nothing else. We're walking higher on very low or declining volumes, and so far lately it's just been a period of tight price compression. These little tiny candles, I mean, we're moving up but ever so slightly. What is that? Let's try to measure that out, just using a measuring tool here. So for the last, it's almost 2 weeks of trading, and usually the strongest index, the growth index, QQQ, has gone up about 1.5%, and that's on these cluster candles. So let's just watch those. I'm going to get in. I want to show you what happened on the 60-minute charts that what triggered the move down this morning, and then in the reversals I just showed you, we hit the support here. But I also want to make mention, and I'll maybe touch on those stocks in a little bit here. Almost all of the FAANG stocks report in just a couple weeks. So one of two things, well, anything can happen, but the closer we get to those earnings, you're either going to see the market go into a holding pattern. It's similar to a big FOMC meeting. What happens is on rate decision meetings, which are the important ones, the market kind of goes into a holding pattern, goes into low volume. Everyone's on a wait and see approach. What's the Fed going to do? We may get that here with the all the FAANG stocks coming up to report in just a couple weeks here. You could also get a breakdown. Maybe those in those stocks are nervous right now about which way the earnings might go, and you could break down. I doubt you're going to see a surge of buying into that again because we're so overbought. Anything's possible, but again, we don't have a sell signal, at least on the most significant chart here, the daily chart, until and unless we get a solid impulsive break and or close below that level, and then you have minor support there around 182.83. So that's what I'm watching, and let's look at what happened today intraday. It was interesting. This is ping pong with the bots, I call it. The bots being the robots or the high frequency trading, the algo trading programs. You can see what you're looking at here, by the way, is a 1-minute chart, and there's where we closed the week. That was Friday's close right there. So all of this is today's trading. So at the open we popped a little bit, and then we turned around and dropped. This is about a 0.8% drop, 0.8%, and then rallied back to within literally, I believe it was 1 penny of the highs earlier. And that's the computers walking the thing up and back. Now this breakdown, I will say, was there was a technical catalyst for this. We'll get to the 60-minute charts in a second. And that also bears watching because we basically broke trendline support on the 60-minute and then back tested it. But you can see, so round trip on Qs to go absolutely nowhere on the day, with a big down and a big up. And this is what happens when volume is low. The algos, computers, they can trade easier, they can move the market easier on lower volume than they can on high volume. Again, let's not read too much into what happened on the daily chart because it's still more the same. The trend is currently bullish unless we get a solid break on that QQQ trend line. Let's look at the 60-minute chart real quick. And so here's what happened. I posted this before the market opened earlier today, pre-market, and again last week. This trend line right here on NQ is what I was watching. So we had this uptrend line, and it was broken today. And you can see that once it broke, here I'll zoom in a little bit for you. You can see that once it broke, we had very impulsive selling, and that's that 1-minute chart I showed you earlier, that big dump on QQQ. There it is. And then what happened at that point? Boom, we kissed the trend line on QQQ, reverse back for a virtual, but we closed right on it. So this is a breakdown and a back test. A lot like back here, the last time we had the same a similar setup on the 60-minute charts of NQ. We had negative divergence at that high right here. That was a divergent high at this point. And we went on, we broke the trend line, uptrend line support. We had this broadening wedge type pattern, and that we had a back test a few days later. This one is a breakdown same day. So bottom line is, let's just watch and see what happens from here. Will this just prove to be a little whipsaw signal? It's possible. I've had to move this line once already last week and may have to move it again, although it really wouldn't fit from this reaction low. I don't really see a great draw on that trend line, so let's just leave it at that. See what happens. Not try to read too much into this because nothing really has happened on the daily chart, especially when you have a flat close. Of course, nothing's happened. And I added a line right here about 76.60. What that shows you is we have in the last week or so, that's capping all the advances right here. So we have really, at least again, on the 60-minute chart, not as important as a daily, but worth watching, we have a confluence of resistance, at least two intersecting resistance levels in close proximity. The uptrend line, which we're back testing, and then that 75.60-ish level. And again, that's NQ. Let's look at SPY. This is SPY, the daily chart. Same story. Here's your trend line off the lows there on December 24th, all the way up to, or actually on the spike down on the 26th right there, that candle. That's where I have that line starting because that is our low point. And we're dancing right on it. So this can go any day now. I'm going to talk a little bit again about the FAANG stocks. They all report here in just a couple weeks. So we could see the market go into a holding pattern as investors wait to see what the big market-leading FAANG stocks report, or maybe we see a rush out of those stocks before earnings. Investors afraid to get trapped into those. Anything's possible. I just don't see the possibility, or the likelihood, I should say. I don't see the likelihood of a blow-off top. In other words, popping the highs, 294 or so on SPY, and the highs I just showed you on NQ or QQQ, and heading up. This is all just one little area. We're talking within just a 1 or 2, 3 percentage points. That's the range where I think the market will probably reverse. Again, due to the overbought conditions, due to low volume, everything else that's going on, but we'll see. And again, nothing really happens until this trend line breaks. You can see price compression, volumes tapering off in the S&P 500 down here as the market just kind of grinds in a tight range, slow uptrend within, again, spitting distance of the all-time highs. All right, so let's look at the market-leading FAANG stocks. Let's go back to QQQ. If I pull that, it'll populate a watch list that I have. I need to sort that by market cap. I'm doing that on another page. All right, and then we go to the components. Here's what I want to point out when these guys report and also their technicals. April 30th, AMC means after the market close. So Apple's coming up here in about 2 weeks, and it is walking. It's right on trendline support. And this is really what I wanted to point out, and I did in a recent video. A lot of these stocks are walking up and they're right on trend line support. You have divergence there on Apple as well. So the trend is up, and until unless this breaks, and you want to see again not just one. We had Amazon break down today, but we didn't see the rest of the FAANG stocks or any other FAANG stocks. We're going to just go through these quickly. So there's Apple. 2 weeks to go before they report. Here's Microsoft. They report a little before then, about the 24th. On the 24th, after the market closed, same story, wedging its way higher, just above trendline support. Only one bad day away from breaking that down. So again, that's what I'm on watch for. I have price alerts set on all of these, and I don't want to see one, but I want to see several break, and I want to see impulsive red sticks. And that's that. Otherwise, we don't have a sell signal on the market until and unless that happens. That's Microsoft. Next up, Amazon. This one did break down today, and it closed right below. There's a trend line. Also comes off the 24th right there, the lows, and a breakdown. Not very impulsive, and we closed right below it on a back test. So that one's still, like I said, you need to see more of those market-leading FAANG stocks go, not just one. One of them's not going to do the trick. Thursday, April 25th, after the market closes. Let's see, Alphabet, Class A, April 29th, after the market closes, walking right up on the minor trend line with that yellow trend line below. That's a little bit of a busy chart. And there's the other share class, GOOG. So again, here, let me move that. We don't even have divergence on this one. This is probably one of the better looking ones, I think, out of the group. But again, one of the market leaders. Facebook, Wednesday, April 24th, after the market closes. So that seems to be a big date, on the 24th, on around there. And you can see same story, wedging its way up higher. Maybe it continues and we just bring up these divergence lines. Anything that happens unless these trend lines break down doesn't really mean much. And again, it's about risk reward. The trend is up, but you know, you're not really going very far lately. The momentum has slowed down quite a bit, and that's part of what these indicators, you know, that's the takeaway from reading these. As the momentum slows, even if the stocks continue higher, you will see the momentum indicators roll over and sometimes make a bearish cross. It helps, obviously, they go down, but this is why you can see here this PPO and the RSI both sort of flattening out, leveling out as momentum slows. So either way, keep an eye on that, and just keep in mind, it may be, if the market does just kind of grind around and go into a holding pattern, then you can see that you're going to have about 10 days to 2 weeks before all these guys are out of the way with their earnings, and just be on guard. You know, if we break down before then, there's certainly a possibility that you see some profit taking. You know, people unloading those stocks because of the run up we've had. There's Intel. Negative divergence, minor trend line right here just above it, and then the alternative trend line there. And I still think Intel comes down to at least 50.68. Whether or not it's going to make a run at the previous high right here, I'll put a line there. And there's your previous high around 57.57. And again, so you're talking, if it tests that high to the penny, 1.5%. If it just breaks above it and then reverses, maybe a few percentage points, but it could also fall shy. We'll see what happens. Thursday, April 26th, after the market closes. And finally, I won't go through them all. Cisco, very clean, very steep uptrend line, wedge type pattern. They report Wednesday, May 15th. So there's a little while to go. This one, you know, if you're going to take any short trades, I can tell you this too. When you're going long or short anything, any of these big names, the top components, you want to align it with the broad market or with QQQ. Is it possible that this one goes against the grain? Certainly. Any of these can. I've even seen Apple correct. I've seen Apple have a bear market where QQQ was still rallying. So that shows you anything can happen. But for the most part, and lately we've seen this, we saw this leading into the October highs last year, and then when things went the other way, is that there's a high correlation because everybody's indexing. They're trading the NQ futures, they're trading QQQ. These stocks are moving together with the Qs and with the market, and as well as SPY. So my point being, if you break down on Cisco and none of the others break down, then that short trade may not pan out. Again, you want the wind to your back, and that would mean a breakdown in QQQ. But if that did happen, being that this one doesn't report now for a month on May 15th, that gives you a month to let that trade sort of play out and not have to worry about holding that stock going into earnings, which can always be a crapshoot. That can always go either way. So that's it. Let's just wrap it up here. Keep this one short. That's the story on the broad markets, and as boring as they are, we're seeing movement. We've had just the sectors that I'm looking at that are not related or correlated to the broad market. Auto parts stocks. 2 weeks ago today, I think it was, I listed my top 6 picks. On average, they're up well into the double digits. Some well over 10-20% in some cases. I think there was even one up 60% as of today. I posted. And the shippers too. The shippers have just been on fire. I highlighted those also about a couple weeks ago, and they continue to do well, and they will unless the market rolls over. So that's where the money is to be made right now, not in the broad market. So we'll keep an eye on this, and like I said, I want to do these videos. They become monotonous, boring, because it's the same old. But don't fall asleep at the wheel, because that's what happens. The market inches up. Everybody comes complacent. They give up on shorting, and then boom, it just takes one big red candle like this. On a clear technical breakdown, and of course I've talked about, said I'd wrap it up, but XLK, this is what it's all about, the tech sector. And XLK, you can see, is still above trend. There's a trend off the lows off the 24th of December, lots of reactions along the way, and still within there, the uptrend line. So that's it. We have a divergent high just like we had back here, and all we need now is a nice little sell signal, and then boom, next leg down. All right, we'll stop it here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.